Hi, welcome to the Market Alert for Tuesday the 14th of April 2014. Just before we get into today's markets and have a look see what happened during yesterday, I just want to cover a couple of things with regards to the PTP, XXX and PTI indicator settings. Received a question yesterday about this, and in the trade calculation is where there would be any difference in the appearance of the signals. We'll just have a look at that first. PTPs are 50% entry, 10% initial stop, as is the XXX as well, which you'll see there. And then in the PTI it's 50% for the entry price and then 50% for the stop, which is where the difference is. However, that said, as I have mentioned in the Market Alert, I am experimenting at the moment by increasing the stop on the PTPs and the XXXs as well, and that seems to be working fine as well. It gives the market a bit more room to breathe. But if there is any, if I have used that during a particular trade, then I will let you know about that. So that's the calculation side of things. In the PTPs, we've got to show the PTPs, show the unsuccessful ones. Then we've got 8 and 20, and the intensity is 8 with the low volume filter applied. In the XXX, we've got show unsuccessful. Obviously, it's checked there, 8 and 20. And this has been set at 25 as well, so just so that you know there has been a difference owing to the volatility. But at the moment the settings are 8 and 20, and then the PTI is 25 and 5, and we're showing the major and the minors, of course, in that one, but no low volume filter. Right, let's have a look at yesterday. We can see the market driving high with professional buying there. Then all of a sudden we get up to the 18,100 level, and this becomes a barrier for the market, a ceiling as it were, and then we get a PTI there showing this potential weakness, and we see the market moving sideways to lower there. Just draw that one in for you there. The market then went into a sideways range, and as I said in Monday's Market Alert, there was no news out for Monday, so the market could be quiet and sideways, and that's precisely what happened when we got into the trade. The market coming back above the entry point at around 1640, and then eventually making its way down to the actual scalp level there, and then through to the psychological level of 18,050, which is around 40 points on this trade as you see the market come down. Eventually this was broken and the market continued on down to the 18,000 level, but by the time we got to this level I was fed up of waiting for the market to drop, plus there was no news, and we were also in the quiet time for the PTIs there as well. But the market did break through, and with professional selling there, you can see the selling coming into the market. The market was retested, and then the market had a bit of a bounce there, and then we got a second bite of the cherry there. I'll just get rid of that one. On this we had a XXX, and we see the market moving down to the scalp level, and then of course these last two are half an hour before the close, so that's why you see them as losing trades, and you wouldn't have taken these anyway. So another 20 points there as well. In the daily chart, you can see yesterday the market hitting that 76% that we drew in on in Monday's Market Alert, and then making its way back down, and of course on the overnight the market is reversing and moving back towards the upside there, so we'll keep the 76% retracement in there at the moment. On the news front, let's have a look, see what we've got after 2:30. We've got business inventories out at 3 p.m. These are forecast to show an increase of 0.2. That's at 3 p.m. medium impact, but as there's no major economic news out at the moment, then maybe this will be used to move the market back to the upside should the figure come out at what is forecast there at 0.2. On the implied volatility, we've got 1162 for Friday session. Let's just refresh the chart, see what we've got for Monday. 12.96, a 1% increase there as the market moved lower. So no surprise there really, because even though the market drifted slowly to the downside, this was enough cause for concern to see the implied volatility increase by 1%, which is a very interesting picture actually, because given that there was only a 100-point range during yesterday, it's amazing how much we saw the implied volatility tick up. So the market certainly doesn't like the downside at the moment, any sign of prices moving lower, and the options are marked up quite markedly there. Right, that's it for today. I will see you in tomorrow's edition of the Market Alert. As ever, thank you for your support and also for watching. See you in the next one.